think, act, and prosper. You are now tuned into the Money Level Show.
Hello, everyone. Welcome back to the Money Level Show. Today, I got a special guest for you guys. This is an important interview right here because I've been watching this man for a while talk about gold and silver, talk about uranium stocks and many other investments that are very cheap right now where we can really just be able to dive in and be able to build wealth for ourselves in the upcoming bull markets and the commodities and things like that. So without further ado, I want to introduce to you all Mr. Rick Rule himself. How you doing, man?
I'm fine, sir, and thank you for having me on. It's a pleasure to address your online community. I enjoy the opportunity.
Yeah, definitely. I started this thing and it's just kind of been, now it's kind of picking up steam a little more. So I'm like, okay, now I just got to make sure I keep the content coming, I think everything's around content.
Delivering value, that's what it's about in any line of work.
Definitely. So, Rick, I know you have a lot of experience in this arena of investing, and then you're also the CEO of Sprott U.S. Holdings. Could you tell us a little bit about your background and kind of just how you came to this point?
I like to say one mistake after another. When I was a young man growing up in California, I liked to be outdoors. I liked agricultural businesses and other businesses. I liked to hike. As a consequence of that, I went into natural resources and was stuck in an office, not going outdoors for probably the rest of my life. I emigrated to Canada in 1970 as an 18-year-old. Both because the University of British Columbia was a fine school, both for business and for natural resources, and also because a young American in 1970 was going to have to travel, at least a young male American. And I thought, would I enjoy Vancouver or Saigon more? And so I chose Vancouver.
So Vancouver, Canada, Vancouver.
No, Washington. Vancouver, Canada.
Yeah.
So that seemed like a wise alternative to the Vietnam War from my point of view. And so the combination of those two factors took me north. I need to say, Darrell, I've been extremely lucky. I use my college education in natural resource finance every single day. And I'm absolutely delighted with the way my life has worked out. So although I describe my career progression as working very hard from one mistake to the next, the truth is, it's been a wonderful vocation and a wonderful avocation. I enjoy what I do so much that I can't imagine doing anything differently.
Yeah, that's very important. Doing what you love to do, and everything just kind of just like goes with that. Falls in place, and it's hard work. Obviously, you mentioned in hard work, and just being able to do what you love to do is very important. And that's kind of a piece of like, our podcast where we talk about with money levels, like everything is not necessarily about, where you are in wealth wise, but it's also like, where's your happiness? Where's your, what's going to sustain you and what is important to you. And so that's good to hear that perspective. Yeah. So what kind of drew you to commodities? I know like, for me personally, just kind of looking at everybody jumping in the Tesla stock, and then I'm like, okay, well, what do you need to make Teslas, and things like that. And people kind of forget about the commodities. They run towards the hype and run towards, what's hot, but they don't really think about what goes into making those products or goes into making those batteries and things like that. So what kind of drew you to invest in commodities?
Darrell, I had an intrinsic interest in my teens in geology, in forestry, in the various academic disciplines around natural resources. But then I came into early adulthood in the decade of the 70s, which was the wildest commodities bull market that we've seen for quite some time. The gold price went from $35 an ounce to $850 an ounce. Natural gas price went from 20 cents a thousand to $15 a thousand. The silver price went from $1.50 to 50. So by accident, I found myself very much in the right place at the right time. Other young people, principally men in those days, that went into financial services had the opposite experience. They went into an equities market that experienced a 12-year-long bear market. So every day they went to work, they got kicked and bruised. And every day I went to work, I had the wind in my back. Now, all good things must end. Resource businesses are cyclical. And in the decade of the 80s, we unwound the excesses of the decade of the 70s and all the things that had worked in my favor. Let's just be polite and say turned into challenges. And I learned, which your young viewers must learn, that markets always work. So the cure for a bear market, or rather put differently, the cause of a bull market is a bear market. Mm-hmm. And the cause of a bear market is a bull market. We're coming into a period, we're coming out of a period where natural resources generally have been shunned. They've been out of favor. They've been cheap. The consequence of that is that resources are cheap and offer high utility, which is the precondition for a bull market. There will become a time, Darrell, when you are viewed as a seer for having to come into the resource business. And at that point in time, you'll need to find another place to go because the fact that we're suddenly in favor probably means that we've outstayed our welcome in a sector that is cyclical, if nothing else.
Yeah, definitely. You recommended the Intelligent Investor on one of your recent podcast episodes. So I started reading that book, and it was definitely talking about kind of like the cycles and things of that nature, and how the commodity cycle, which I believe we're heading into that, or we're kind of at the beginning of that. Will eventually, be overbought. Everybody's going to run into it, run the prices up and things like that. And then we got to figure out what is the next thing that's coming. I think Warren Buffett said, be greedy when others are fearful, be fearful when others are greedy. And so yeah.
That's the best quote there is with regards to resources. And I'm delighted that you brought up the Intelligent Investor. The most important investment you can make, particularly a young person, is in your own education, developing your own paradigms and your own attitudes. It's important that having bought the book that you read the book, and it's important reading the book that you employ the book. Mm-hmm. But I can't overstate, particularly to your younger listeners, the importance of investing in yourself and your intellect first. I'm just absolutely delighted that you read the book.
Yeah, definitely. It's about 600 something pages. I'm still at the beginning of it, but I'm planning on getting through it. And it's really challenging me because, when I grew up, I didn't really have that education of finance or budgeting or anything like that. So then, I got into the Dave Ramsey thing, about 5 years ago, and that kind of opened my eyes to like money. But Dave Ramsey, he would talk a lot about mutual funds and things like that. So then I started realizing this isn't the only way to build wealth. Like there's multiple ways to build wealth. And, I started learning kind of just like how to pick, certain stocks and kind of, I'm still a novice at valuations and things like that. It's a big concept to grasp. And so, especially coming from my background. And so I'm definitely enjoying the book so far and just kind of just trying to learn, what I can about how to pick good companies, how to, read about them, read about the CEO. What are they talking about? Things like that. And, I heard you say on one of your podcasts that for each stock that you have, you should at least be able to spend about an hour a month with that stock and kind of just researching and learning and looking at financials and things like that.
No, that's absolutely correct. Too many people, their technique is got a hunch, bet a bunch. And you can get lucky doing that occasionally, but it's not a way that you make money. You make money in a competitive market by outcompeting your peers in any endeavor of life. If you want to be a good basketball player, Kobe Bryant said he became a hugely successful basketball player. Yes, first of all, because he was tall, but there was lots of tall guys. Yeah. He just worked harder than everybody else. He showed up earlier, he went home later. And when he was there, he worked harder. And it's the same thing in investing. You're competing against millions of folks, but luckily for you, most of them don't show up. Yeah. You can beat these guys if you show up and they don't show up. That's the way it works. And you're starting the right way. The Intelligent Investor, particularly, there's two real important chapters. One is margin of safety. in The Intelligent Investor. And the other is Mr. Market, which talks about the cyclicality that you were talking about.
Yeah.
Being brave when others were afraid. It's just a wonderful way to start.
Mm-hmm. Yeah, definitely. And I think one of the biggest things, for me is like the emotional, aspect, and the psychology of it, where, I have a cousin, one of my cousins, he's a very, exotic and kind of like his investing, and he goes after the trends, he plays options, and for me, I'm trying to be conservative and stay on that path. Like, okay, what I'm doing is, I'm investing in good companies, I'm doing my due diligence and things like that. And then sometimes, like, he posts his earnings and or his what he's made, and then it kind of tricks me into like, okay, I'm gonna get into options, and it's really tough when you're dealing with that emotional part of seeing people, take advantage of this bull market or this bubble that we're in, and then also being like, okay, let me go ahead and invest what's not hot right now, what people are hated, and nobody's really making money off of this right now unless you're putting a lot of capital into dividends and things like that. And so it's really a hard balance at times.
I would say be happy for your cousin's success. There's a whole bunch of ways up the mountain, and if trading a narrative works for him, that's great. But you need to determine what's going to work for you.
Yeah. That's really
the
important.
fact that somebody else has been successful at something is interesting, but not particularly relevant. You need to take into account what you enjoy doing, what your strengths are, what your disciplines are, and you need to sort of mark your own path up the mountain. I've known, I grew up in Silicon Valley, and some of the people that I grew up with have been really, really, really successful in technology. Now, for me, those are businesses I couldn't spell, let alone pronounce. And so despite the fact that I was brought up there, and despite the fact that some of the people that I grew up with have become very successful, there was probably no opportunity for me in technology. I wasn't interested in it. I wasn't suited to it. And so despite the advantages that I had growing up in Silicon Valley, resources were right for me. I'm delighted that my peers did well in it. I'm delighted that the place that I was brought up in has created so many advantages for the world, but it's irrelevant in terms of how I make my money.
Yeah, exactly. That's good. I'm definitely gonna take that to heart. Come back and keep watching this interview and like, okay, let me listen to what Rick said. Rick, that's really good. So there's a lot of different investors that I've been kind of listening to and kind of looking at what they're saying, and I keep hearing this concept of the biggest wealth transfer of our lifetime, and there's parts of that where I'm like, okay, yeah, like this is a shift in cycles. I mean, you have long-term debt cycles, you have all those different things, and then I've been kind of doing some research on like just how a lot of the bubble that's been inflated, the baby boomer generation are being able to benefit a lot off that with retirement plans and owning houses, and then the younger generations are like getting out of school with a lot of debt, no house, no retirement plan, and kind of just like. And so I'm just kind of trying to process how this unfolds or whatnot. But what's your perspective on that?
Well, that's the $64 trillion question. Let's unpack it a few ways. My generation didn't realize it, but we had it pretty easy. I'm not trying to say there weren't the odd challenge like the Vietnam War as an example, but we came into a post-war circumstance where technology changed and the world got smaller. There was better contacts between people. The world opened up, trade opened up. So everything was really pretty easy. We also came into a circumstance where there had been a period in American history where we had very limited government, which meant that there was more money left over for the people. That less was taken from on high. Your generation has the advantage. They have really two advantages. The technological advantage that my generation has or had is dwarfed by the technological advantage that your generation has. The circumstance that you face where there is better communication between people, despite the protectionist tendencies that happen, is wonderful. The new tolerance in the world, the sense that when I was a kid, let's just be honest in this podcast, where all decisions should be made by old, bald, fat white guys like me, was stupid.
Mm-hmm.
The idea that you ignore the work and effort of half of humankind, which happens to be female, and more than half that happens to be non-Caucasian. This is a wonderful new era, not because we're righting old wrongs, but simply because there's more people focused on the problems than the opportunities. So this is great, but there's all kinds of bad stuff too. People increasingly believe that other people are responsible for their success or lack of success. People believe in government. People believe in obviating their sense of personal responsibility, which is idiocy, truly idiocy. I can make you some recommendations, but you got to read the book and you got to put it to work. In addition, we are leaving you, I mean, my generation is leaving your generation, a stupendous amount of debt. A stupendous amount of debt. Let me quantify it, some of it for you. At the federal level, before state and local debt and individual debt, on balance sheet liabilities, the US government are about 26 or 27 trillion dollars. For your listeners, that's 12 zeros after the 27. And the off balance sheet liabilities, which is to say entitlements, Medicare, Medicaid, Social Security, Environmental Trust Fund, all those promises that we've made to each other, the net present value of those liabilities exceed $120 trillion. These sums aren't being conjured up by some old, bald libertarian crank named Rick Rule. They come from the Congressional Budget Office. And so my generation, the baby boomers and the guys right after us, have voted ourselves all these cool benefits. You know, indexed pensions and Medicaid and Medicare and all that kind of stuff. So we get all the benefit and we're leaving you all the bill. Now, from my point of view, this is sort of amusing. From your point of view, this is highly problematic. And you need to learn, first of all, that you need to defend yourself against we the people, particularly against old people. That isn't to say that we can't do nice things to you, but we're doing a bad thing to you too. And so you need to learn to organize your life in a way that anticipates the fact that we're stiffing you for at least $150 trillion liability. People your age say, well, I just need to get through to this age, and then Social Security kicks in. What Social Security? You know, there was a little ditty I learned growing up from my grandfather, and it went like this. When your outgo exceeds your income, your upkeep becomes your downfall. And as individuals, we need to repeat that in order to save. But as a society, we need to repeat it too. And what your generation needs to understand is that my generation failed in that regard. We have this $140 trillion in debt, and we service this debt with the national income, which is taxes and fees less expenses. The problem is that the national income has a minus in front of it. In other words, rather than service the debt, we increase it by $3 trillion a year. And we aren't going to pay for it. You are. So get ready.
Yeah, definitely. Yeah, that's kind of some things I've been looking at, you know. I mean, especially with what's in conversation now about, you know, erasing $50,000 in student loan debt. And that's like one of the few assets that that the country has. And then, you know, and all the debt that's just being borrowed by the Fed purchasing treasuries and all the interest owed. It's wild. And you know, right now, you know, I think you know, for me, like I've been kind of in this position where it's like, okay, erase 50K of my student loan debt, you know, and I'm just going to go buy gold, silver, and just kind of prepare myself while the world burns. But, you know, it's also one of those things where it's like, man, you know, my kids, you know, I think about my kids and my kids' future, and it's like, wow, what's going to happen in that, you know, and you know, a lot of things with like, you know, kind of like the socialism ideas and things like that, you know, also coming to pass. And then, you know, so yes, it's a lot to that, man. It's a lot to that.
your kid's future will be really in your hands. You can't outsource that to society. You have to teach them.
Yeah.
I'm not saying you shouldn't let them watch TV, because you need to let them see the rest of the world thinks, the way the rest of the world thinks, but you have to set their values. You have to make it so that they watch those TV shows and they understand what they're watching and what part's good and what part's not good. And you have to save so that you have something to transfer to them, and you have to teach them to save too, because you aren't going to be around for their whole lives. I hate to be an old man preaching.
No, that's important.
But the way you led into it really begs the question. Too many people in the world today, probably 97% of Americans, believe that the government is there to help them. And that is a wrong assumption from the beginning. H.L. Mencken famously said, "The voters almost always get what they want, most often good and hard," which I think is important. He also described elections as advanced auctions of stolen property. And if you understand it in that context, you understand that rather than being an organization that you can count on, this needs to be an organization that you live with because they have the guns. But it's an organization that you need to understand and you need to prepare yourself for. You need to prepare for your future yourself.
Yeah, definitely. Yeah, and that's very important. Like, especially, people that depend on, that are relying on the government, to come and save them. And I've been definitely preaching like, okay, let's become our own central banks. Let's get, precious metals. I mean, you could spend $30, with the premiums, buy an ounce of silver, or whatever, and that's kind of just those things where I've been really thinking, it's like, okay, what can I pass down to my kids? What can I pass down, and what can I teach them, about money and about, wealth and things like that. Cause for me, like growing up in, urban neighborhoods and things like that, it's been like a lot of the conversation is like, okay, how do we get rich? But how do you sustain wealth? How do you sustain that? That's been a big piece of what I've been focusing on and learning about.
Well, I think you're on the right road, doing this self-exploration, talking to other people about it, and reading books like The Intelligent Investor. I would encourage you too, and your listeners, to read another book called Economics in One Lesson by Hazlitt. The economics that we get taught in school is, from my point of view, fallacious. It's fiction. It's wrong. And understanding how the economy works and how the community is really just a package of individuals, I think is a really necessary way to prepare yourself and for you to prepare your children for the world as it is, as opposed to the way that most of the people in the world think it is. There's an interesting Italian social scientist, now dead, Pareto. And Pareto's responsible for the social science dictum, Pareto's law. It's been popularized as the 80-20 rule, where 20% of the population generates 80% of the utility, or 20% of the workers do 80% of the work. What Pareto proved statistically was that was by and large true across many disciplines. But it isn't necessarily the hard workers so much as the people who have prepared themselves and exhibited discipline. And there are no barriers to entry personally from being part of the people who get it. Yes, certainly there are societal barriers. There are prejudices, racial prejudices, ethnic prejudices, gender preferences. There's nothing you can do about that. The only thing that you can do is prepare yourself to take control of your future and do the best you can with what you've been given. And I've been fortunate enough in my 68 years on Earth to watch a lot of people succeed. And sadly, I watched a lot more fail. And it's really up to you as to what camp you decide to hang out in, Yeah,
definitely. And I've kind of been looking, I'm actually working on a video now. It's going to be a little controversial, but I'm kind of going a little bit deeper into history with just, especially, with African Americans, just like um, how the dollar used to be stronger and our dollar went a longer way, and how wealth was built, and how, we were owning homes, and things like that. I mean, because a lot of people will mention like redlining and things like that, but that mostly like kept us from buying, homes in white neighborhoods. But we were able to buy homes in our own neighborhoods, and looking at these kind of statistics, it seemed, from what I was seeing, like it's decreasing, a lot, and our population is increasing, but our home ownership is decreasing. And
You know,
so I've been looking at that.
the best political philosopher in American history that I know, I'm no political scientist or anything, but the best political philosopher I know in American history was Malcolm X, a very prominent African American. Now he said a lot of stuff, but a couple of the things that he said make absolute sense. One was self-determination. The whole Shabazz movement, which was really an early Black capitalism movement, was all about personal self-reliance and community self-reliance. What he said specifically to the Black American community was, it's too bad what white people do and have done. That's beyond our control. So we have to do to ourselves for ourselves, which was absolutely right. What he said that was much more valuable, I think, was don't let, irrespective of who you are or what you are, other people's opinion of you generate your opinion of yourself. If somebody has an interest in maligning you, their interest in maligning you isn't merely of no interest to you, it's harmful to you. Do not let your perception, do not let your sense of value, do not let your ambition be determined by other people's view of you. That was extremely important.
Yes.
And what you say is exactly true. Redlining, the pernicious part of redlining, the discriminatory part of redlining, meant that you didn't have a proper mixing of Americans, which would have benefited everybody. The other negative impact of redlining is, even in neighborhoods where Black people were free to buy without reference to discrimination, there wasn't financing available. And that wasn't merely wrong, it was a sin. The answer to that, of course, beginning in the 60s, were Black-owned banks. And my suspicion is that some elements of the Black community became, ironically, like the Black Muslims, stronger as a consequence of the circumstance. I'm not suggesting that we return to a circumstance that makes a community stronger by struggle. But it is very interesting, since you brought up the African American community in the context that we're having, that the most important, as far as I'm concerned, the most important champion of every idea that I'm espousing in this broadcast that I know of was Malcolm X.
Yeah, definitely. And that's important, like, because I've been kind of learning more about just self-responsibility, listening to, Thomas Sowell, listening to Malcolm X, listening to people that, a lot of the mainstream media aren't really acknowledging. And that self-responsibility is very important, because, a lot of times people are like, okay, well, let's address wealth inequality, things like that. For me, it's like, okay, the government has no solution for me, myself, and I have to act in a way that's going to set my family up, and it's going to put me in a good position. And that's taking that self-responsibility, and taking, and just like knowing that somebody else's ideals and someone else's, us expanding the balance sheets, us doing all this, it's not going to save us. And so, for me, that's just one thing that I've been really focusing on, is like, how can I take responsibility myself? And there's things that happen in our society that, were atrocious, and but at the same time, it's like, okay, am I going to sit back and let that paralyze me? Or am I going to focus on, what I can do, for my kids' future, for my future, and, and all of that.
And in that case, you're going to be fine. You're going to be fine. It's ugly to say, but you are one of 3 or 4% of Americans who recognize that. The fact that you recognize it and act on it means that you're going to outperform the average. That's just the way it's going to work. Even an old fat bald guy like me can win the 100-yard dash if nobody shows up to race against me.
Yeah.
With you
That's
having
true.
discovered self-reliance, you being 1 out of 20 who has discovered self-reliance, it makes absolute sense statistically that you're going to win the race against the other people that don't show up to run against you.
Yeah, definitely. I appreciate that. Yeah, that's good. So one of the concepts that's been coming up, the topics that's been coming up is inflation. And I've studied a little bit about it regarding like the 40s and also the 70s, and how commodities thrive in inflationary environments. What becomes money is the commodities, the corn, the gold, the silver, that's what becomes money when fiat currencies are losing so much value and and inflation's happening. So what are your thoughts on how people can beat inflation, prepare for inflation? Because like, to be honest, Rick, like one of my concerns is like, okay, I'm educating my family, African American. Okay, this is some things that I kind of see coming down the line. What can we do to prepare for this? And that's kind of one of those tangible things like that I've been trying to communicate, especially to the Black community and to other people of color,
But you're, you're,
because
you're already on first base.
Mhm.
You've already begun to run the race, which is important. You showed up. You have understood what the problems were, and you understood that no one's going to solve them for you, that you got to solve them for you. And by the way, that's not a Black phenomenon. That's a human phenomenon.
Yeah.
You've had a few more challenges than somebody who looks like me, but the fact that you showed up means you're partway there. Education is really important. But when you think about the perniciousness of inflation, when you think about what inflation does to you as a saver, you understand that you need to defend yourself against it. My own belief is that the most effective inflation hedge, which is available to us as savers, is gold. You begin to hedge against inflation with gold. It's a savings product. Now, that presupposes, Darrell, that you save to begin with. What happens to many people is that they forget to save, that they spend more than they have, that they value the Starbucks, that they value a nice car, that they value a pair of sneakers or something like that more than they do for your future. I was mercifully, and I don't know how, well, I do know how. I read a book by a guy named Nickerson when I was 16, who taught that you save 10% of your pre-tax income no matter what. He wrote a book called Pay Yourself First. And in order to save savings, you have to save. In order to be a capitalist, you have to have some capital. But once you've overcome that, once you've made yourself save 10% of every paycheck, pre-tax, no matter what, no ifs, ands, or buts, no excuses. Mother's birthday, doesn't matter. You should pay yourself first. Then you think about what you're going to save in. Gold traditionally has done well when people are concerned about the purchasing power of their savings in fiat currency denominated savings products. So gold is an important thing. The rest of the commodities market does well in the context of inflation too, but it's more important to note that the rest of the commodities complex is cyclical. In other words, you think of commodity investments as investments that you buy when they're out of favor and sell when they're in favor. Gold, and to a lesser extent silver, are the way that you protect yourself as a saver against inflation. People, particularly people of your age, Darrell, need to buy a little bit of gold. You don't need to buy too much, because when gold moves, it really, really, really moves. But buy gold consistently and pray that it doesn't go up a lot. When I say pray that it doesn't go up a lot, circumstances that make gold extremely valuable are almost always unpleasant in the rest of your portfolio. One of the reasons that people don't like to buy gold is they think about the circumstance that will cause it to be more valuable. And the thoughts concerning that circumstance are so unpleasant that they try to turn their brain off and maybe have a beer. But in direct answer to your question, think gold and silver first. Think about the rest of the commodities the way that you would think about the Ben Graham book, Being Brave When Others Are Afraid. Most people are afraid of other commodities right now, or else they're bored by them because they haven't moved. People right now are selling oil stocks because President Biden doesn't like oil and Greta Thunberg doesn't like oil and all those things. But the world runs on oil. The idea that you can buy an asset class that's essential to the well-being of mankind because it's unpopular, you need to organize your life and organize your brain so that the fact that a necessary asset class is unpopular is an asset, an attribute to you, not a deficit to you. And employing that mindset by reading books like The Intelligent Investor makes the rest of the process over time easy.
Yeah, that's really important. I've been viewing gold more than kind of like a cycle. For me, gold is wealth. Gold is a store of value. And I've done a few videos breaking down on the whiteboard how much a dollar used to be worth, 1/20th of an ounce of gold, and how $1 is today versus an ounce of gold today. I'd much rather been in gold and pass that down generation to generation than dollars. And so that's been very, very important for me, and just kind of seeing that the value is more than just what it's worth in fiat currency. And I mean, gold's gotten people out of countries that had to flee wars and all types of stuff like that. And I just see the value as more than what it's worth in dollars.
Well, that's right. If you look at me personally, as an example, I'm the largest shareholder of Sprott Inc. If the gold price goes up, Sprott, which is natural resources and precious metals investment firm, will do well. So a real financial planner would say, Rick, why do you own gold? Your whole life is leveraged to gold. I'll tell you why I own gold, because it helps me sleep nights and stay calm. Gold enhances my sense of well-being. And I was struck by something you said in the first part of your comment, which is that gold is wealth. And I believe that to be true. I believe that the insurance part of gold, the fact that it tends to take care of yourself when other things are falling apart. And when I think of it also in the context of it helping me sleep nights and still enhance my sense of well-being, the essence of wealth is having a sense of well-being, knowing that you can provide for yourself, knowing that you can provide for your family. Wealth isn't just about going into a restaurant, not having to look at the right side of the menu where the prices are. Wealth is a very holistic comment. And I think people, your listeners, would do well to remember your quote that gold is wealth, and that they would do well to have a very holistic sense of what wealth was.
Yeah, definitely. And that's kind of one of the things I try to break it down, like in the sense of you don't have to, I understand like an ounce of gold can seem expensive or whatnot, but you don't have to even have an ounce. You can get 1/10, it's just so many like fractional pieces of gold that you can buy, and to be able to have something, just get something, spend $20 on a 1/10 or whatever, like get something in your portfolio, get something in your house, hide it, whatever, like just have something there.
And save continually.
Yeah.
Save and save and save and save and save.
Yeah, definitely. So what are some of the best commodities that you think that are going to be booming in the next, 3 to 5 years? I know we've talked a little bit about uranium. I hear you talk about uranium a lot. I've been getting into uranium, and just I love the argument for it, and I also heard the bear market case for it as well. I mean, there's always risk in any investment. What are some of the commodities that you're looking at right now that you think are going to be in the future?
I think uranium is a good example. Despite the fact that uranium is unpopular, it provides 25% or 20%, pardon me, of the baseload power consumed in the United States, 15% of overall power consumed in the United States. And uranium at the spot price, $30, means that the price the industry receives for uranium is less than the cost to produce it. Either the price goes up or the lights go out. Those are the two choices. This is very, very simple arithmetic. Now, the thesis is much less attractive than it was 3 months ago because all the stocks have gone up. It's weird that, if we go to the store and buy tuna fish and the price of tuna fish goes up, we get angry with the store owner. But if the price of a stock goes up, we're elated by it. So the fact that stocks have been up by 30 or 40% mean that they're 30 or 40% less attractive. I still believe that the uranium price goes higher, but I would like to see the stocks decline before I buy more. 3 or 4 months ago, too, when the oil price was at $40 a barrel, that was stupidly cheap. I mean, truly, spectacularly, stupidly cheap. It had to go up. It did go up, but I think it'll fluctuate. And I think any time that you see the oil quote below $45 a barrel, you can buy the oil stocks with impunity if you have a 2 or 3 year horizon. I think the agricultural materials, by that I mean the components of fertilizer, particularly phosphate and potash, are cheap and will become more expensive. Probably the most undervalued commodity in the United States, not where you and I live in the state of Washington, but rather the country as a whole, is water. Water pricing and water markets are controlled by the government, which means that rather than have water flow naturally downhill to money, to markets, they flow uphill unnaturally to votes. But that'll sort itself out over time, too, to the benefit of some, unfortunately, to the misery of many. But the truth is there's a whole range of commodities. What's important for your listeners to understand is that it is the out of favor commodities that present the opportunity, not the in favor commodities. When commodities are highly priced and thus appear desirable, that high price encourages production, while at the same time it discourages consumption. It leads to conservation. By contrast, when commodities are underpriced, it encourages consumption because they're cheap and discourages consumption, which is to say that low prices are the cure for low prices in commodities and high prices are the cure for high prices in commodities. Zinc, I think, is cheap. It's economically sensitive. So if we do go into a recession, people will look back at this interview and say Rick Rule was a moron. But that could happen. Zinc is cheap. Nickel is pretty cheap. Gold, priced in dollar terms, is cheap. It's important to know that.
Yeah, definitely. That's good to know. So Rick, I appreciate you coming on and everything, and being able to talk to my listeners and to kind of point us in some good, wise directions. Right now that there's a lot of things competing for our attention and can easily get us off course and easily get us in a situation to where where we wouldn't be happy, and so I appreciate the wisdom that you brought today on the show.
Well, I enjoy the opportunity to address your audience, and at the risk of being misinterpreted, I particularly enjoy the opportunity to talk to a younger Black audience. Sometimes folks who are old and fat and white and bald don't get that opportunity. So I appreciate the fact that I've been invited to address that audience.
Yeah. Thank you. Appreciate it a lot. All right. You take care.
My pleasure. Thank you.